Good morning. Welcome to CupO'Forex. This is David Frank with your daily video analysis for Thursday, the 30th of October. We're coming into the end of the week as well as the end of the month. Yesterday, the United States Federal Reserve pulled the plug in quantitative easing. The QE is finally gone, and the next step, and what we're going to be watching and listening for, is when are they going to normalize economic policy? When are they going to raise rates, and by how much? That's what's next on our minds. Going into the end of the month, we continue with a lot of economic data coming out. Let's look at our calendar for today. It is a busy day. Off the bat, in about 5 hours and 50 minutes at 8:55 a.m. GMT time, we get the unemployment change from Germany. We're expecting that change to come in at 5,000, which is a little bit lower than last month's reading at 13,000. We also get the unemployment rate. We're expecting that to stand pat at 6.7%. Later on today at 12:30 GMT time, the United States will enter into the economic data reporting. We're getting their gross domestic product annualized. We're expecting this number to come in at a respectable 3%. We're going to be seeing if this is true. If you recall, we had a bit of problems at the beginning of the year with a slower than expected GDP reading. Let's see if all the economic data that's been coming out since then holds true. 3% is the number we're looking at. We also, at the same time, getting initial jobless claims. We're expecting that number to print up at 283,000. Hopefully, this number might come in a little bit less than expected. We will see. Also today at 1300, we from Germany, we get their consumer price index year on year. There's no inflation at all throughout the Eurozone. That's been a problem. They're fighting deflationary pressures. We're expecting this to come in at a very tepid 0.9%, if not a little bit less. It might miss the mark. Don't be shocked. We're also getting the consumer price index year on year. No inflation. 0.9%, maybe less. Also today, coming out of Japan at this evening at 23:30 hours GMT, we're getting their national consumer price index year on year. We're expecting that to come out about where it came out last print, around 3.3%, or around 3.2% around there. And tomorrow, the high impact economic data continues. Let's take a look at some technical analysis for today. Okay, let's start with our technical analysis for today. I want to do a bit of a brief recap on some of the analysis our analysts have written over the last week, including myself. Let's start with the euro dollar. As I wrote yesterday in my analysis, the recovery that we've seen, which started right about here, as you can see the bullish candlestick. Actually, it started a little bit further back. You saw a false breakout here. This never came to fruition. We failed at the a key technical level at 1.2850, and since then we've been bouncing around in a bit of a consolidative pattern. We've seen a couple other brief attempts for the euro to push higher, and this morning the euro is pushing back lower. We are currently testing a minor support level near 1.2620. We are still trading well above a key technical support at 1.2500. I would like to see, a fall below this level before saying, hey, we are going into a bearish move again. And if we're going to have any kind of recovery at this point, we need to break back above the 55-day daily moving average, which you can see here, and that has further support, or is supporting further, the 1.28500 level. I also want to take a look at gold for today. Remember how we've been talking about gold moving in a tight consolidative pattern? Yes, gold has had a bearish stance, but over the last few days, there's been a lot of buyer and seller hesitation. All of a sudden, the precious metal has fallen off. We did fall towards the lower end of this bearish channel, where we bounced higher. So we did touch 12.90 in that area there, and we seem to have petered out again. I'm going to go out on a limb here and say we will continue in a bit of a consolidative stance, especially with the end of QE. and with what investors are thinking about where, when, and by how much will the Fed raise interest rates. So we'll see some play not only with the U.S. dollar over the next few days, a little bit of jerky consolidative movements, but as well as with the precious metal as well. Finally, I'd like to take a look at the New Zealand dollar, U.S. dollar, the Kiwi. As I wrote yesterday in our featured article, the darling of the Forex world seems to have fallen out of grace, all over some spilled milk. New Zealand's having issues with the lower dairy prices, and that's going to affect the Kiwi dollar. We're still trading well below a key technical level of 80, and with this bearish cloud pattern, we're aiming for the support levels. We're currently testing a support at 0.78, so we'll see where that goes today. All right, this concludes today's daily video. Thank you for listening and have a wonderful day trading.